Welcome back, everyone, to another episode of Market Insights. I'm your host, Tom, and today we have an interesting article to discuss. It's about the latest Consumer Price Index (CPI) report in the United States. Joining us is our resident financial expert, Jenny. Welcome, Jenny.
Thanks, Tom. It's great to be here and discuss the recent developments in the economy.
Absolutely. So for our listeners who may not be familiar with the CPI, could you briefly explain what it is and why it's important?
Of course, Tom. The Consumer Price Index is a measure of the average change over time in the prices paid by urban consumers for a market basket of goods and services. It helps gauge inflation and reflects changes in purchasing power. Essentially, it tells us how much more or less consumers are paying for everyday items.
That's a great explanation, Jenny. Now, according to the article, the most recent CPI report showed a significant increase. Can you elaborate on that?
Absolutely, Tom. According to the Bureau of Labor Statistics, the CPI rose by 0.9% in the month of October, which is the largest month-over-month increase in over a decade. This increase was driven by rising energy prices, supply chain disruptions, and increased demand as the economy continues to rebound.
That's quite a significant jump. How does this increase in the CPI impact consumers and the overall economy?
Well, Tom, when the CPI rises, it means that the cost of living is increasing. Higher prices can put pressure on consumers' budgets as they need to spend more for the same goods and services. It can also impact businesses as they face higher input costs, such as raw materials and transportation. In some cases, businesses may pass these increased costs onto consumers in the form of higher prices, which can then further contribute to inflation.
That sounds like a challenging situation for everyone involved. How are experts reacting to this CPI report?
Many economists and experts were expecting a rise in inflation, given the unique circumstances we're experiencing with the pandemic recovery. However, the magnitude of this increase has caught some by surprise. Some worry that this spike may not be temporary and could translate into sustained higher inflation. On the other hand, there are those who believe that this surge is transitory and expect inflation to normalize as supply chains stabilize and pandemic-related disruptions ease.
It's a complex situation indeed. So, Jenny, what can consumers do to cope with rising prices?
That's a great question, Tom. There are a few strategies consumers can use to navigate through a period of rising prices. Firstly, it's essential to create a budget and prioritize spending. Recognizing needs versus wants helps individuals allocate their finances more efficiently. Additionally, researching and comparing prices before making purchases can help find the best deals and potentially save money. Lastly, exploring different brands, considering substitutes, and embracing thrifty habits can contribute to overall cost savings.
Those are some excellent tips, Jenny. Thank you for sharing them. Now, as we wrap up, what are your final thoughts on the CPI report and its implications?
The recent CPI report is a reminder that as the world emerges from the pandemic, adjustments in prices are expected. However, it's crucial to monitor the situation closely to assess whether this surge in inflation is temporary or indicative of a longer-term trend. By staying informed and following financial strategies, consumers and businesses can navigate through these uncertain times and make more informed decisions.
Thank you for your insights, Jenny. And thank you to all our listeners for tuning in to today's episode. Remember to stay informed and adapt to the changing economic landscape. Until next time, take care and happy investing.